JasmyCoin is down 80% from its yearly high. Most traders have moved on. The charts look dead. But something strange is happening beneath the surface. A pattern so textbook it almost feels too good to be true. Smart money might be quietly building positions right now, while retail investors scroll past Jasmy like yesterday's news. The question isn't whether Jasmy can move, it's whether you'll notice before it does. Welcome back to the channel. If you're tired of chasing pumps and want to spot setups before they explode, you're in the right place. Hit that like button, smash subscribe and turn on notifications because today we're diving into a coin most people have already forgotten, but the charts are telling a completely different story. Let's talk about JasmyCoin. Right now, Jasmy is trading around $0.0097, sitting roughly 80% below its yearly peak of 0.041. Ouch. That's the kind of drawdown that makes you question your life choices and your portfolio. But here's where it gets interesting. Jasmy isn't behaving like a dead coin. According to recent technical analysis, the token is forming what traders call a power of 3 pattern on the 2-hour chart. This isn't some obscure indicator your cousin made up. It's a 3-phase structure used by institutional traders to accumulate positions before major moves: accumulation, manipulation, and expansion. Jasmy has already moved through 2 of these phases. The accumulation happened between 0.0117 and 0.00973, a tight sideways grind where volatility dried up and volume went quiet. That's the zone where smart money quietly builds positions without moving the price. Then came the manipulation phase. On November 11th, Jasmy broke below that range, dropped to 0.0092, and immediately snapped back. Classic liquidity grab. Stop losses got triggered, weak hands sold, and the price bounced right back into range. Now, we're potentially entering the 3rd phase, expansion. And if this pattern plays out the way it's supposed to, Jasmy could be eyeing a 14% move to 0.01114. Not life-changing, but definitely noteworthy if you're positioning early. The real question is whether this setup holds or falls apart like so many before it. But wait. Before you rush to market buy Jasmy, let's pump the brakes. Crypto has a special talent for making patterns look perfect right before they implode. Jasmy is currently trading below its 50-period moving average at $0.00984, which now acts as resistance. The price needs to reclaim that level and hold above 0.00973 to confirm the breakout is real and not just another fake-out designed to wreck traders. And there's more. Jasmy sits at a market cap of around $470 million with approximately 100,000 holders. That's not tiny, but it's not exactly Ethereum either. According to one analyst who still holds a significant Jasmy position, the token has been through this cycle before. Quiet accumulation followed by unexpected rebounds. His view: recovery comes in waves, not explosions. Slow at first, then stronger when liquidity returns to altcoins. But here's the uncomfortable truth. Jasmy was supposed to hit $1 earlier this year. Instead, it melted 80%. The hype died. The social chatter cooled. Most retail traders moved on to shinier toys. So why should anyone care now? Because the setup is forming precisely when no one is watching. That's either the perfect entry or the perfect trap. The 50 MA and the 0.00973 level will tell us which. Okay, so what happens if Jasmy actually reclaims those key levels? According to the technical breakdown, once the token pushes above 0.00973 and flips the 50 MA into support, the expansion phase officially begins. From there, the next resistance sits near 0.01065. Break that, and the measured move target lands around 0.01114, roughly 14% upside from current levels. Not moonshot territory, but a clean technical trade, if you're managing risk properly. Now, my take. This pattern looks legitimate, but context matters. We're still in a market where Bitcoin dominates liquidity flow. Until BTC stabilizes and altcoin season genuinely kicks in, smaller tokens like Jasmy will struggle to sustain momentum. The analyst tracking this setup mentioned a falling wedge pattern forming around Jasmy's current zone, a bullish structure that often precedes breakouts. But wedges only work when volume confirms the move. Without volume, this is just lines on a chart. What I find most interesting isn't the 14% target, it's the behavior of the price action. That November 11th wick below support, textbook manipulation. Institutions and whales use these moves to collect liquidity before reversing. The fact that Jasmy immediately bounced back suggests someone wanted to shake out weak hands before pushing higher. That's not guaranteed to work, but it's a bullish signal when it happens cleanly. I'm still holding Jasmy through this painful drawdown. I believe the token could hit 0.10 or even 0.20 in the next major bull phase. That's a 10x to 20x move from here. Bold? Absolutely. Impossible. Not if altcoin season returns with conviction. His reasoning is based on past cycles where Jasmy rebounded after similar dips. He's not chasing perfect entries anymore. He's positioning for the next wave. But let's be real. Holding through an 80% drop requires either conviction or stubbornness, and sometimes those look identical. The market has a rhythm, and Jasmy is still moving to its beat, just quietly. The project's vision around user data ownership and privacy remains relevant. In a world increasingly paranoid about digital privacy, Jasmy's concept still holds weight. The community hasn't abandoned ship. The token hasn't been delisted into oblivion. It's just quiet, maybe too quiet. So, where does that leave us? Jasmy is at a crossroads. The power of three patterns suggests smart money is positioning for a move, but confirmation is everything. Without a clean reclaim of 0.00973 in the 50 MA, this setup remains theoretical. Watch that 0.0092 support level closely. If Jasmy loses that decisively, the bullish thesis weakens, and we're back to waiting for another accumulation cycle. The broader altcoin market also plays a role here. According to multiple analysts, liquidity needs to rotate out of Bitcoin and into smaller cap tokens before Jasmy can truly run. Right now, Bitcoin is absorbing most of the attention and capital. That's normal during early bull phases, but once BTC consolidates and traders start hunting for higher risk-reward plays, tokens like Jasmy become interesting again. One thing I've learned in crypto, the best setups form when no one cares. When social media goes quiet, when holders give up, when the chart looks boring, that's often when accumulation happens. Jasmy fits that profile perfectly right now. The chart is quiet, the hype is dead, yet the structure suggests something is building. Is Jasmy a guaranteed winner? Absolutely not. Could it surprise everyone with a strong move if the setup confirms? Yes. That's the game. You don't need certainty. You need probability on your side and proper risk management. If Jasmy reclaims key levels with volume, the 14% target becomes realistic. Beyond that, 10 cents or 20 cents in a full altcoin season isn't crazy talk. It's happened before with similar tokens, but you need patience. Jasmy isn't going to explode tomorrow. Recovery comes in waves. First, a slow grind back above resistance. Then, if momentum builds, a stronger push when attention returns. The analyst holding through this downturn isn't expecting instant riches. He's positioning for the next cycle, knowing that timing bottoms is impossible, but recognizing patterns is profitable. For now, Jasmy remains a waiting game. The pattern is there. The potential is there. The confirmation, that's still pending. Alright, that's the full breakdown on JasmyCoin. And if you found this analysis helpful, check out my other videos where I break down setups before they pump. Don't forget to like, subscribe, and drop a comment with your thoughts on Jasmy. Are you buying the dip or staying away? Let me know. Quick reminder. This is not financial advice. Crypto is highly volatile and risky. Only invest what you can afford to lose, do your own research, and never rely solely on technical patterns. Markets are unpredictable, and setups fail all the time. Trade smart, manage risk, and stay safe out there.